Hello NRIs, let's talk about basics. Are you really an NRI or a resident individual? The difference is massive and it is not based on your passport or where you work. It is actually based on how many days you have spent in India. Now let's talk about the rules. And the primary rule is 182 days rule. If you have spent less than 182 days in any financial year in India, then you become an NRI for that financial year. And financial year here means 1st April to 31st March of the following year. The moment you cross this 182 days mark, you become a resident individual for tax purposes. Now let's talk about rule number 2, which is for frequent flyers. So even if you have spent less than 182 days in any financial year in India, you can still be considered as resident individual if you have spent 60 days or more in the current financial year and 365 days or more in the preceding 4 financial years in India. This rule is actually to track all those people who travel back to India often. Now let's talk about the consequences. And the first consequence is the global taxation. So the moment you lose your NRI status, all your global income, your European salary, your rental income, your stock income, all of this income will become taxable in India, which can be really massive, right? As an NRI, only your Indian income is taxable. Now let's talk about consequence number 2, which is on the bank accounts. So the moment you lose your NRI status, you have to convert all your NRE and NRO accounts back to the regular saving accounts, which also means that you will lose all the tax-free benefits on your NRE accounts and also your repatriation limit will be exhausted. With that said guys, staying less than 182 days is key to maintaining your NRI status and also keeping intact all your tax-free benefits. So guys, save this reel and forward it to your NRI friends so that they are aware of it.